The banks have actually traded pretty well. JP Morgan specifically was really struggling around 138. It's got itself obviously north of about 144. But we get Citi, JP Morgan, and BlackRock, not necessarily a bank. Morgan Stanley, Bank of America, Schwab on Tuesday, and then Goldman Sachs on Wednesday. So JP Morgan is going to be the one that everybody looks at. The juxtaposition with Citi is stark. To talk about that outperformance that I've just been talking about, I guess, Carter, we drew these lines. We held that uptrend line recently when it traded down to held sort of the 138 level. I understand why people get excited about JP Morgan. What I'll tell you is, you're probably trading 1.5 times book, close to 2 times tangible book at this level, which is historically not ridiculous for this stock. The question is it justified in this environment? And I know you wear that hat from time to time. So what are your thoughts? Have the banks run too much into earnings this week?
Yeah, so we've got some BKX charts, but look, the quality banks, the big ones, the ones that over time, that's the U.S. Bank Corp, JP Morgan, of course, are always trading at a premium. It is, I think it's a 1.5657 book here. It always is a premium. There are others that are, quote, cheap. Cheap is cuts both ways. It's almost an expletive, right? It's a dirty word. It's a bad, but it also can be quite accurate from time to time. All things held equal, and we'll see some charts here next. Barring really, and that's not what we're getting from the messaging from the market or industrials, barring a real hard recession, the banks are cheap. And I talked to a lot of FIG analysts and portfolio managers. So the question is, do we trade them? Now we have earnings coming, of course, at the end of the week. My hunch is they're going to move higher into earnings, but we can look at the charts. Let's look at So this is
KBW.
You can see it there. There are no lines, no drawings, no judgments, no annotations. Let's put some in. So let's take it away. Let's toggle before, after, before, after. Does it have to do what those green annotations imply? No. But that's my thinking, right? That's a fairly well-formed bottoming form, a minor bottoming formation since the March low. And a snapback here to overhead supply would be about 9, even 10%. Now, are we going to get that tomorrow or in the end of the week if big moves? No. But that's my hunch. Or said differently, there's such a divergence between the S&P and this very important sector within the S&P. At some point, you have to get convergence. Either the S&P's is got to give ground, or the BKX, the banks, the transmission mechanism of the economy have to sort of recover a bit more than they have.
Yeah, we looked at JP Morgan. I agree. And I think part of the bull thesis in the IWM is, well, it's not predicated, but it's the notion that large component of it are small and regional banks. In the absence of bad news, which we haven't really seen over the last couple of months, these things will sort of levitate to valuations levels that make a little more sense because obviously they dropped to pretty historic lows. And I think part of the bull thesis in the Russell is exactly that. And then you bring up the KBW, which I think reinforces that point.
Yeah. And so it's a trade in this case. And look, there are people, and rightly so, who spend their lifetime trying to understand these businesses. And they would say, yeah, but the charge-offs are rising, the delinquencies are rising. The net interest margin's not what it needs to be. They're still sort of regulated by the Fed, and but it's not about that. Yes, it's about that long term. Long term, there's a relationship between the shares of a company and the earnings of the company. But this hour, this month, this 6 months, this 3 months, it has nothing to do but money flow. And the question is, and we can look at the chart again at BKX, is that a minor bottoming formation, and do we play it long? I think we do.